Hey guys, what's up? Welcome back to my financial focus. In this video, I'm going to be doing a stock analysis of Nvidia. Nvidia recently announced earnings about 1 week ago, and they beat analyst estimates by about 10 cents. They announced about $1.30 per share for their earnings per share. And so in this video, I'm just going to figure out if Nvidia presents a good buying opportunity from a value investing perspective, because even though they're up about 700% over the last 5 years, which is extremely impressive and definitely beats out the total market, and they're up about 60% over the last year, which we can see from the S&P 500. It beats out the S&P 500 over the last year by about 50%, with the S&P 500 increasing 10% and Nvidia increasing about 60%. Despite that, they are down about 30% from their all-time highs just about 3 months ago, when they were trading about $330 per share, and now they're down to $220 per share. So I'm going to go into their annual report and their financial statements, and then also do a discounted cash flow analysis using Microsoft Excel to try to figure out if Nvidia presents a good buying opportunity at the current share price. So the first thing that I want to do is just talk a little bit about Nvidia's business. And for those watching this video who don't know, Nvidia's two main operating segments come from their GPU segment, where they design and sell GPUs for gaming and PCs, and then also from their computer and networking segment, where they provide data center platforms and systems for artificial intelligence, like with the Omniverse, for example, and also for autonomous driving. They're trying to branch out into the self-driving and autonomous vehicle space as well. And then also with their robotics solutions that they provide for PCs and other companies. And so these products, they make their way into various markets. And obviously with their gaming segment, they primarily try to focus on providing better graphics and more realistic scenes and sharper images for games using their improved GPUs. And then they also help professionals in the architectural and engineering, media and entertainment space with 3D depictions and simulations to try to help them in different ways, and then also to provide 3D solutions and simulations for autonomous vehicles, which is one of the biggest markets right now. But obviously, if we're talking about these different technological sectors in the market right now, there are a bunch of different companies who are trying to gain market share in those areas. And so, as we can see from their income statement, their revenues have been increasing pretty steadily over the last few years. But one of the main risks that are posed to Nvidia for their future revenue growth come from the fact that they're competing against some of the biggest names in these fields. So for example, let me back up here just a second so that we can look at their financials and then take a look at the specialized markets that their revenues are coming from, so we can distinguish them from their competitors and figure out their competitive advantage. So we can see right here that their revenues for the year ending January 31st, 2021 came out to be about $16.6 billion, an increase from $10 billion the year prior, and their gross profit increased to about $10 billion from $6.7 billion, and their net profit for their last operating year was $4.3 billion, with their basic earnings per share coming out to $7 per share. And so if I break up their revenues into detail, we can see that their revenue by reporting segments right here, the graphics part of their business produced about $9.8 billion of their total revenues, if I zoom in here. And we can see that the computer and networking segment of their business produced about $6.8 billion of their total revenues. And we can see their net income, their net profit margin, it increased from about 25.6% to 26%. And also their gross profit margin also increased. So they're increasing their revenues faster than their cost of revenues are increasing, which is always a good sign to see with a business. But now if we go into even further detail with their revenues, if I were to scroll down here, we can see that they have their revenue by geography right here, which I'll get into in a little bit. We can see their revenue by specialized market. And based on these markets, we could think about some of their biggest competitors in these spaces. For example, with gaming and creating different GPUs for stronger gaming computers, they're mainly competing with companies like AMD and Intel, who are also suppliers of these GPUs and these accelerated computing solutions. And then also right below that, we see their data center and professional visualization operating segments. And in these segments, we could see that they could potentially be competing with some of the larger internet service companies, like with Alphabet, who's the parent company of Google, as well as with Amazon. And then lastly, underneath that, we see their automotive segment. And if they're trying to compete in the autonomous self-driving vehicle area with their AI and their machine learning algorithms, then they're going to be competing against different companies like Samsung, Qualcomm, and Tesla, which are also suppliers of different products that are embedded into these automobiles and these autonomous machines and these gaming devices. So it's going to be tough for Nvidia to continue to differentiate themselves and beat out the competition in these very, very competitive segments. But I think one of the main competitive advantages that they have is that most of their revenue doesn't even come from the United States. As we can see here, almost 90% of their revenues come from international geographical areas such as Taiwan, China, other Asia Pacific areas, and then also in Europe. We can see of their total revenues of 16.6 billion, only $3 billion of that comes from the United States. And so considering that for other companies they might be competing with, like Google, Amazon, AMD, and Intel, whose revenues might not be as diversified geographically speaking as Nvidia's are, Nvidia could potentially gain market share elsewhere outside of the United States, which could help them gain some sort of competitive advantage and build a moat for themselves moving forward. And so the next financial statement that I'm going to look at is their balance sheet. And if I scroll down here a little bit, we can see their balance sheet. And right here, we can see something pretty interesting, which is how much money they actually invested into marketable securities in 2020. And we can see they had about $10.8 billion of cash on their balance sheet as of January 26th, 2020. But as of January 31st, 2021, they had almost no cash on their balance sheet anymore, a decrease from about $10.8 billion down to about $847 million of cash. But their marketable securities increased from about $1 million worth of marketable securities to about $10.7 billion worth of marketable securities. So they're definitely investing pretty heavily, which potentially could be a smart move by Nvidia, considering that the share price of a lot of different stocks in 2020 declined a lot. So they could be trying to get a return on their cash as opposed to just sitting on it and letting it collect dust in a bank somewhere. And then obviously one of the red flags that I saw right here that caught my eye is that a lot of their total asset increase came from goodwill and intangible assets. We can see their total assets increased by about $11 billion, and almost 6 to 7 billion of that came from goodwill and intangible assets. And so they are definitely opening them up to a good amount of goodwill impairment and intangible asset amortization risk, because if their goodwill turns out to not be as valuable for their future revenues in the future, then they're going to experience a goodwill impairment, and that's going to negatively impact their total asset value on their balance sheet in the future. Then right here on their total liabilities, we can see that it increased from about $5 billion to about $11.8 billion. And then we can see that their total shareholders' equity increased from about $12 billion to $16 billion. So most of their business is financed by equity, as we can see the $16 billion over the $11 billion in total liabilities, which could be a good thing because it means that their business isn't too over leveraged, but it could also be a bad thing because if they're continually issuing more stock in order to finance their business, then they could be diluting shareholders moving forward, as opposed to if they were taking advantage of like low interest rate loans and borrowings and things like that. And then instead of issuing shares to raise capital, they could be buying back shares or more shares than they are currently buying back. As we can see, their treasury stock account is pretty large, so they are buying back shares, but they could be buying back more shares, which could overall end up increasing their share price even more if they were to do so in the future. But that's Nvidia's choice, and we'll see how that works out. Time will tell. But the last statement that I want to look at is their cash flow statement, which is personally my favorite statement, so that we can see the cash inflows and outflows of the business. And we can see that their cash flows from operating activities for their most recent reported year was about $5.8 billion, which is up from $4.7 billion in the prior year before that. And we can see a very similar story being told by their cash flow statement as was on their balance sheet, which is that they invested pretty heavily into purchase of marketable securities in the year ending in January 31st, 2021. And then also they raised quite a bit of capital by issuing debt net of issuance cost, which came out to be about $4.9 billion. And so they raised more capital in 2020, and then they also invested more of their cash in 2020 as well in relation to prior years. And so because of that, the cash on their balance sheet at the end of the year decreased from about $10 billion to about $840 million. And so if I were to look at a discounted cash flow model, which I've already gone ahead and done, we can see based on these different growth rates, which I got from Yahoo Finance, as well as the year one free cash flow and the net cash minus the net debt that I calculated from looking at their balance sheet, we can see that the intrinsic value per share based on these growth rates is expected to be about $131 per share, which compared to their current share price would put Nvidia at a bit of an overvaluation at the moment. But let's say hypothetically speaking that the growth rate that I got from Yahoo Finance for the next 5 years, which is about 30.18%, let's say that this value were to stay constant for the next 10 years, then in that particular case, that would mean that Nvidia is currently trading at near their intrinsic value because it comes out to be about $210 per share, and Nvidia's share price is currently about $220 per share. So if their growth rate does remain constant at about 30% annually, then, which obviously is a pretty big ask, but if that were the case, then that would mean that Nvidia is currently trading at about intrinsic value. But from a value investing perspective, if somebody wanted to buy in at a 30% margin of safety of $147 per share or a 50% margin of safety of $105 per share, then that would mean that Nvidia currently might not present a good buying opportunity based on these growth rate assumptions. But I would definitely love to know what everybody watching this video thinks, if they think that Nvidia is presenting a good buying opportunity right now, or if they're going to wait for the share price to drop further, or any other thoughts. Definitely let me know in the comment section below. Subscribe to the channel, leave a like on this video, and I'll see everyone in the next one.